Okay, welcome everyone. Today we're going through part one of a two-part series. The first one, today's video, is just understanding GST, what it is, how it works, how it affects your business. In the second video, we're going to go through the BAS, the Business Activity Statement. Most business owners know that this is something you pay quarterly, and us accountants, we assume you know what this is and what it all means, but more and more nowadays I pause and I ask my clients, do you actually understand what this is? And more often than not, the answer is no, even though they might have been paying it for years. So it's really important just to understand what this is, what you're actually paying in your BAS, and understanding that the BAS and what we pay in the BAS, including GST, is separate to our income tax at the end of the year. So this video is for anyone who's still really trying to work out how GST works. You might know that you have to add it onto your invoices and charge your clients GST, but you might not really understand how the BAS works and what you're paying every quarter or every month if you're on a monthly BAS. So let's get into it today, going through how GST works. So obviously we're talking about an Australian context here. If we're overseas, that they will have another sort of GST, which might be a value add tax, but here it's called the Goods and Services Tax, and it's an extra 10% tax levied on most goods and services in Australia. There are some notable exceptions. Certain foods are GST free. A loaf of bread or a carton of milk are GST free. Certain medical services or educational services, they will be GST free. So, bakeries and cafes, restaurants, some of the food you might sell might be GST free and others will be GST inclusive. It gets a bit convoluted, all the rules around food. And certain costs are GST free as well, like rates, stamp duties on insurances and that sort of thing. But typically, most costs will have GST added onto it. And I think most people are aware of that. Now, when you're running a business, you're essentially acting as a middleman for the tax office. So you are collecting GST on behalf of the tax office. You're supposed to be setting it aside and paying it in your BAS. And the danger is, or the problem is, it's sort of cash sitting in your bank account, but it is really not yours. And if you go and spend it, and then you get to BAS due date, you've got no cash. So keep in mind you are the middleman. So let's just look at how you would calculate GST. As I said, it's 10% added onto the net price. So for example, a net price of $10, we add 10%, being $1, and we get to $11. Fairly straightforward. Net price of $2.50, we add 10%, we get to $2.75. And so if we're trying to go from a net price to a gross price, most people I think understand how to do that. We put in our net price, we add our 10%, and we get to our gross price. So you could, if you wanted to get directly to the gross, you would multiply it by 1.1 as an example. That times 1.1 gets us to our 110. So it's the same as adding 10%. Where some people get confused is going from a gross back to a net. So we're sort of going in reverse here. And for example, if we put in $100 gross, and we're working backwards, the GST is not $10 if we're going backwards, it's only $9.09, and that gets us back to the $90.91. And so the trick here is to divide by 1/11. Sorry, to divide by 1.1, or the GST is 1/11 of the gross. So again, here's our example. We're dividing by 1.1 to get back to our net. So that's how you would go from net to gross and gross to net. Now, the first part of the equation is the GST on your income. Okay, now most people understand how this works pretty well, I think. So when you invoice a customer or you sell your product to your customer, you're normally going to add 10%. So you might be a subcontractor doing some work, and you know that your bill is $3,000. You add your GST, and you get to your $3,300 gross, which you then charge your client. Key thing to remember here is that $300, while it's in your bank account, it's not actually yours. You are just saving this on behalf of the tax office until you pay your BAS. Okay? Now the next part of the equation is one where some people don't quite understand. And that is that when you're running a business, you obviously have costs as well. If you're providing a service, you've probably paid, some materials, and you've got some overheads that are going into creating that service. So when you buy things like materials or software subscriptions, fuel for the vehicles, your accounting fees, your advertising, all of these costs, you're really paying GST to someone else, right? And so, someone might give you an invoice and the net is $1,000, they add the GST and you pay them $1,100. That $100 GST that you've just paid, we get that refunded back to us in our BAS, because again, we're the middleman. We're not the end customer or consumer, we're just in the middle. And I'm going to show you a little diagram of that in a minute, because we are not the end consumer. GST only ever gets taxed on the end consumer. And while we're on that train of thought, I'm going to show you that supply chain, that GST supply chain right now. So let's just think about it like this, okay? Let's just think about a situation where we have a manufacturer, they sell a product to a wholesaler or a supplier, and then they sell it onto a retailer, and then that retailer then sells it onto the end customer. GST works so that it gets passed down the chain and ends up with the end customer. So when we go to the shops and we buy our groceries, or we go shopping and we buy some clothes or something like that, we are the end customer and we pay the GST. But everyone else in the middle kind of just passes it down and only really pays the GST on the margin that they make. So for example, if this is your business here, you're the wholesaler or the supplier, or maybe even you're a subcontractor here, you are going to, and the retailer is your customer, you're going to charge them the GST, and simultaneously you're going to be paying the manufacturer for your inputs, for your purchases, and you're going to claim the GST that you pay them. And you can see it sort of goes down the chain until we get to the end customer. So if you're here or here or here, you're sort of passing it down the line, and we're going to return to this in a moment. So if we continue on this train of thought, we are charging GST on our income, and we're going to save this and pay it to the tax office. We are paying GST on our expenses, and we're going to get that back when we lodge our BAS. And so really, we're talking about our net GST. So every quarter when you report and pay your GST in your BAS, your business activity statement, it is the difference between the GST on your income and your GST on expenses. That's what we're paying in our BAS. Now the BAS has some other components, which we're going to go through in the next video, but that is the key component of your BAS. It's your net GST. So one way to think about this, how I like thinking about this, is thinking about a little profit and loss statement here. And we've done this in a couple other videos, using the profit and loss to visualize and to understand what we're doing. So to work down the profit and loss, we have our sales, 66,000. We then have materials, motor vehicle, some rent, rates, insurance, subscriptions, and repairs and maintenance. That leaves us with a net profit of 43,000. Now, this column here, this is our gross amount, and the way to think about this is the cash that passes through your bank account. Your customers pay you $66,000, and you pay your suppliers all of these gross amounts here. So at the end of the quarter, we're left with $43,000 in our bank account, but it's not all ours. Some of it is GST. So next column here is the GST. So we've taken 1/11 of the gross price of our sales. So of that $66,000 worth of income, $6,000 is GST. And that means we're left with net of $60,000. Same thing with all our expenses here. So the materials, $16,500 gross, $1,500 worth of GST leaves us with $15,000 net. And you'll note here, rates, there's no GST on council rates, for example. So a few things us accountants look out for in your bookkeeping is if we've correctly picked up all the GST on different expenses and different income. We won't go through that in detail here, but that's something we do as part of processing your BAS. Now, if you think about it, we've collected $6,000 worth of GST on our income. We've paid almost $2,000 worth of GST to our suppliers, which means we're left with $4,000 worth of GST. Now, this is our net GST that we owe the tax office in the BAS, okay, or at the end of the quarter. And so there's two ways to think about it. It's GST on income minus GST on expenses equals $4,000. The other way to think about it is you're essentially paying GST on your profit. You're essentially paying, 1/11 of your profit is GST. Now, it's not always exactly 1/11 because often there's a few GST-free expenses, but that's the other way to think about it. So whenever you're making a profit, you're going to be paying GST, unless you're doing some GST-free income up here, but we won't go into that because most people will be, if you're making a profit, you'll be paying GST. And so remember, that's what hit the bank account. This is what we are holding on behalf of the tax office, and our net amounts, that's what we're left with at the end of the day. Okay, so we've paid the BAS, that's what's in our bank account. And here's the important thing, this number here is what goes into our tax return at the end of the year, and that's what we pay income tax on. So separate tax, GST is separate to our income tax. We always pay income tax on our net profit, net of GST. So remember, that's in our bank account, that goes to the tax office for the BAS, and that's what goes in our tax return, and that's what we pay tax on at the end of the year. So I think a lot of clients sort of get a bit frustrated and confused because they feel like they're always paying the BAS. All year they're paying GST and they're paying BAS. And then at the end of the year we say, well, you haven't paid your income tax yet. And they go, well, I've been paying $4,000 every quarter. Where's that gone? That is your GST, different to your income tax, okay? And so it's a good idea to always set this aside in a separate savings account. I often recommend that people set up, a second company bank account, for example, and every month or fortnight or quarter, they put some cash aside for the GST. It's probably best to do it fortnightly or monthly, or even weekly if you like, so that at the end of the quarter, you've got the $4,000 sitting there, it's ready to pay. You haven't spent it, okay? Hopefully that makes sense. Now I want to return to this GST supply chain to just explain what happens under a few different scenarios. So let's just say our business is here, okay? Us charging GST doesn't really change anything or affect the price. And often I'll have this conversation when a small business starts out and they're going from non-GST registered to GST registered. So we didn't really go into this at the start of the video, but if we turn over, so our revenue is under $75,000, we don't have to register for GST. We can just operate as an unregistered business, and we don't have to worry about GST. We don't have to charge it. We don't have to do the BAS. That's one less headache. As soon as we go over that $75,000, we do have to register. And there's some instances when we're below when I would recommend registering as well. But let's just say you started out unregistered and you're in this position here and you're thinking, oh, well, I need to register. Is that going to affect my pricing and what I charge? Not really. So let's just say you're unregistered and you normally charge $100 to your customer who's the retailer, or he's one step down the chain. That's fine. It's GST free expense, so the retailer cannot claim any GST, and so the true cost to the retailer is $100 and the true income to you is $100. Now, unregistered. Now, if we then move to registered, what do we have to do? We've got to multiply that by 1.1, and now we have to add $10 worth of GST onto our invoice when we invoice the retailer. So now we are collecting $110, but 10 of that we have to pay to the tax office. So we're still left with $100, which is our true income. The retailer has to pay you $100, but when they do their BAS, they now get to claim $10 as a refund, which they didn't before because you were unregistered. And so the true cost to them is still $100. Okay, so there's no change, and we don't really need to worry about thinking about pricing too much when you're in this position, and I would call this a B2B position, so a business to business position. If your customers are other businesses, this is your situation. We don't have to worry too much because the true cost will never change. Okay? Now, let's think about what happens if we now move into this position and you're no longer business to business, you're now B2C, so business to consumer. So your customer is the end customer. And so a good example might be a barbershop. Or something like that. So when you start out, you're unregistered, and your haircut costs $30. Okay, no problem. Your customers are happy to pay that. You now turn over more than $75,000, and you have to register for GST. We don't get a choice, so we have to add on that 1.1. We have to multiply that by 1.1 or add the 10%, and now we're charging $33. And so this is when it becomes not just a accounting thing to do, but we also have to think about the real consequences and the pricing in our business. So now the end consumer, their price point has truly changed from $30 to $33, because when I go to the barbershop, I don't get to claim the GST. The end consumer doesn't get to claim the GST, okay? That's how it works. That's how the government eventually gets the tax. So when we're in this position, we actually have to have a think about our pricing and say, okay, well, are we happy to add 10% to the price? Are our customers still going to pay that? Or are we nervous that that's going to push the price too high? And so for some retailers, if you were selling like an on-shelf product, an actual item on your, let's just say you're running let's just say you're in the barbershop or you're running a salon or something like that, and you offer services, but you're also selling products, hand cream or hair products or something like that. We do now have to think about, all right, is the customer going to pay that extra 10% to buy our product? Are we still competitive? Does it still make sense? Most of the time, for most things, the answer is yes, we should add the 10%, because if we don't, that means we're sharing some of the cost. So if you were nervous about the price and you didn't want to put it up by 10%, you might put it up by 5%, right? So you might add 5%, and we're going to charge $31.50. And so thereby you're sharing that GST cost, the customer's paying half and we're paying half. So our true earnings have just taken a hit. So I would only you know, it's worth thinking about this, but often you're just going to add the 10%. Otherwise, you're basically going backwards. It's always better to push the price and maintain your margin rather than, you know, give away some of your margin to the tax office in order to, you know, to satisfy the GST. But there are some people who are truly in a really price sensitive situation and they do have to think about this. But for most people, not a problem, and a lot of businesses as well are in this business to business position where we don't really have to worry about it too much. So I've got some other notes there, but I've really just summed it up using this supply chain. Hopefully that makes sense. I'm going to film another video going over the BAS because the GST is only one part of the BAS. The BAS also has a few other components that make up the total BAS. So hopefully that makes sense and you understand what you're paying every quarter or every month. Remember that GST is a separate tax to income tax. Hopefully this made sense. Get in touch if you'd like to go through any details or if you need a hand with your bookkeeping or with your BAS. Thanks guys.